Let's come to the big story that we want to discuss today. Let's talk about what's happening with crude prices. Crude prices are hovering around the $90 per barrel mark, 92, 93 in the last few days, and could touch $100 per barrel maybe the next 2 to 3 weeks. Now, we know technically our prices that we pay at retail level at the petrol pump for petrol and diesel are determined as per the international prices in the market. But the prices have not really gone up since the 30th of November last year. It could have something to do with the fact that polls start very, very soon in 5 crucial states. In fact, on the 10th of this month, just on Thursday, polls will start, and will start kick off in Uttar Pradesh as well, which is a very politically sensitive state. So perhaps that's one of the reasons why retail prices have not gone up. But will that change once elections are over, and where will crude prices be there? Do we need to brace for a big shock that's coming that we haven't felt yet in terms of mehngai or inflation? To speak more on this, I'm joined now by Dr. Sunil Kumar Sinha, is Principal Economist at India Ratings. Dr. Sinha, thank you so much for speaking with us here on the India Development Debate. Can you give us some perspective on why we should right now really look closely at how crude prices are moving and the impact it could have? Is it just an eventuality that retail prices do go up even from the levels where they are right now?
Absolutely. In fact, the retail prices haven't gone up, as you rightly said, because of the state government elections, which are due to start from 10th of February, polling rather. Now, once the polling is over, we can very well see the prices moving up because in the past, we have clearly seen that such state-level elections have resulted in a freeze on the prices, retail prices. But as soon as the polling is over, the prices starts getting revised, and retail prices starts adjusting to the international prices. So if the retail prices have moved up since November, which is the case, there is no reason why it will not move up once the elections are over and the oil marketing companies start adjusting their retail prices to the international prices.
Yeah. Let me go across to R.S. Sharma, who's joining us on the show for more on this. He's former CMD of ONGC. Mr. Sharma, how much buffer do you think there is? I'm asking this in the context that excise duty on petrol and diesel was already cut by 5 and 10 rupees. Now you've seen a huge jump in crude prices. Explain to us the mechanism and to what extent we can expect a pass-through.
Yeah, that is Tamanna, a bit worrisome, I can say, on behalf of these oil marketing companies. They have not been able to raise the prices. Excise duty was reduced. That time they had some of the margin, how much I don't know. But last more than 80 days, they have not been able to revise the prices. And during this period, the international crude prices have gone up by almost 25%. So I apprehend as of now there will be huge under recoveries for these companies. How much that huge is there? There's no data available, and I cannot speculate. But I can only say that right now the under recoveries with them for this petrol diesel could be of the order of more than $5, more than 5 rupees per liter. Could be more than that. Maybe I'm a bit conservative. I'm scared to, mention my correct, exact assessment. But under recoveries are quite high as of now.
So if we had to guesstimate, what would we think that the recovery needs to be in the next few months? Mr. Sharma, would you like to field that first?
Well, guesstimate, if you say, I would say 7 to 8 rupees per liter would be the price increase warranted as of now. So, to what extent these companies would be able to absorb from their profit margins, and to what extent they will pass on to the customers, that we have to wait and see. And as the media has been telling that price revisions will happen after 10th of March, I'm in no position to comment on that, but that has been happening every time elections get announced. So the daily price revisions are put on hold. So that is the situation as of now. But the kind of the volatility that we have seen in recent days this time, this has not been there earlier. So right now I can understand the oil marketing companies would be under heavy pressure in terms of their margins.
No, clearly they would be right now. If you have to increase prices by 7 to 8 rupees, then logic would dictate you're not going to do that before a major set of elections. But Mr. Sinha, I want to go beyond the impact politically, etc. On can the Indian economy, can the Indian consumer actually withstand that kind of a hike in petrol and diesel prices, which eventually will have to be borne? That's our system and has a massive cascading effect. We're already at a very high base.
Tamanna, if you go back and look at the past, even in the past, immediately after the elections or the polling is over, what we have seen is that oil marketing companies have revised their prices, and these revisions have been pretty sharp and in line with the global oil prices. So there is no reason to believe that this time around, when the polling would be over, oil marketing companies would not be revising their prices. They will certainly be. Well, it is difficult to say whether they will do in one go or they will split it into maybe 2-3 parts and then eventually bring the parity between their retail prices and the global prices. Whichever way you look at it, this imminent rise in oil prices will certainly have a very cascading effect on the economy. And I'm just talking about the first round effect. I mean, we had done a bit of calculation. A 1% rise in global oil price, if it is passed through into the domestic economy, it actually increases the retail prices by about 7 to 8 basis points and wholesale prices by 13 to 14 basis points. So I'm talking about just the first round effect. If you include the second round impact, it will be much more. So net, whichever way you look at it, the inflation would get impacted and severely impacted, more so when it is already at elevated levels. So, it is going to impact the economy across the board. I mean, whether you look at the household, whether you look at the businesses, whether you look at the transportation, all across the board, it is going to impact.
I want to also understand, Mr. Sinha, how much scope is there for relief? I mentioned earlier we already had an excise duty cut. A lot of states followed by also reducing the taxes that they charge, the VAT, etc. Will now governments, state and centre, have to come in for a further cushion, and do they have that cushion?
Well, if tax buoyancy, the way it has panned out in the current fiscal is an indicator, then certainly one can say that if the similar kind of a buoyancy in tax revenue is witnessed in fiscal year 23, maybe there will be some scope. But to believe that the kind of tax buoyancy which we have seen in the fiscal year 22 will get repeated in fiscal year 23, is very difficult for the simple reason that the base will be very high, and also the overall GDP growth, which is expected for fiscal year 22 is about 9.3%. And the economic survey pegs it at about 8.5% for fiscal year 23. Our estimate is that it will be a little lower at about 7.6%. So with this kind of growth, certainly it is not possible to have a revenue buoyancy which fiscal year 22 saw, because the nominal growth in fiscal year 22 was 17.4%. Government has assumed a nominal GDP growth of about 11.1%. I believe that that's an underestimation. The nominal growth in fiscal year 23 will be higher. So certainly there would be some cushion, but it is again.
Let me put this simply. Yes, let me put this simply. Yes. There will be some cushion. It would depend, I suppose, on the political imperative and political compulsions on how much of that cushion will be passed on to consumers, which is why the outcome of these elections also continues to be so key in so many ways. But get ready, brace yourself to pay more at the pump, perhaps as soon as the next month. Thank you so much, Mr. Sinha and Mr. Sharma, for joining us on this conversation. But before we wrap it up, let me play out for you what Mr. Surana of HPCL said when he was speaking with ET Now today and commenting on the spike in crude prices.
The fact remains that the crude prices have been very, very volatile in the recent time. If you see in November, it was 81, in December, it was 69, then in January, it was 82, and now in February, it is again 93. So the swing had not been $1 or $2, it has been in the range of $5, $3 per day. And on month, the change had been to the extent of $10. Now we can have every day a hike of 4 rupees, 5 rupees, and a drop, etc. That is one possibility. Or we try to moderate it so that the things in the market are not that volatile, because all said and done in India, it is a sensitive commodity. It is also a fact that as a country, we are yet to realize that it is an international commodity and will get impacted by the international effects. But having said, within the parameters in which we operate, our efforts are that we keep it aligned to the international markets in the longer run. At the same time, try to moderate the day-to-day volatility to the extent possible. Now, the only problem this time is that there are series of events, series of international events which are happening,